Just quickly run you through the top of the mind cues as we sort of kick off this new session. So U.S. equity and bond markets were shut last night. And this is so no action in that sense from U.S. Markets, financial markets overall. Now, Israel-Iran conflict top of mind. It's the 8th day now. So the conflict sort of is going on. I want to start with, of course, straight up oil prices, which Brent oil prices hit 79. And then they sort of fell to 77, where they are right now, 77, 77.50, basically in that range. And, you know, what caused that was the drop-off, basically, was the White House essentially saying that U.S. President Trump has said that a decision on whether the U.S. joins the fight will come within 2 weeks. So, you know, that's now a new kind of timeline. Within all the timelines, there's another timeline, which is that within 2 weeks, it could come anytime, but 2 weeks is when Trump will make a decision. He also, by the way, Trump also called Iran's interest in diplomatic talks a little too late. I mean, they kind of indicated that they've had approaches from the Iranian side to talk peace and talk negotiations, you know, if Israel stops attacking it. But they said, well, perhaps it's a little too late. Now, in terms of specifics, Israel hit Iran's Arak nuclear facility and a nuclear armament site in the Natanz region. I don't know if you have the graphics on, we should put them up. And Iran, of course, has been launching ballistic and hypersonic missiles, including the Fatah-1 at Israeli targets. This is an indigenous sort of missile which has been developed by Iran. And it kind of sort of, you know, takes the war into a new kind of zone. Now, later today, you have the June options expiry in the U.S. Just to sort of look ahead a little bit, it's the largest on record, by the way. This June expiry is the largest on record. Some $6 trillion worth of notional options exposure will expire. Basically, sometimes leads to greater volatility, sometimes a little bit of one-way price action as well, which gets reversed the next day, which is Monday now. Accenture will also report from an Indian IT services perspective. Accenture's reports later tonight during US session will be important from an IT stock perspective as we come back. Not very much to kind of report in terms of levels, etc. They're all, by the way, I could have put yesterday's levels, what I put out yesterday. I mean, they remain exactly same because the Nifty is not moved, absolutely flat. But the pain showed through in mid and small caps. So 1.6% lower on the mid-cap index and almost 2% cut as far as the small-cap index is concerned. And here, there was a fair bit of pain. Actually, market breadth was one-way negative, and we'll talk more about that in a bit from now. So the levels, Nifty, lower bound support is 24,473. The resistance is 24,982, which is the high of the week, I think now. Bank Nifty support stands at 55,149. And then the next one is 54,200. As I said, numbers have not changed. They're not moving averages. And the resistance is 56,067. So that's there. That's the overall picture as far as this Friday is concerned. GIFT Nifty will come up on your screen, and it'll give you a sense of how we are opening 10 points lower. So once again, like what we've seen over the last 3-4 days, not very different. Guys.
Okay, absolutely. Well, in indecision, that's what you have in Asian markets right now. And if you go by US futures are actually slightly lower, down about 0.25% on the benchmark indices out there. But Asian markets kind of all over the place. You've got some red, for instance, on Japan, the Nikkei. Hang Seng's managing a little bit of a green. But let's come to the data points that we got out of Asia this morning. First, the rate decision from China. The PBOC has left the key rates unchanged, and that was widely expected. So the one-year loan prime rate is at 3%. The five-year loan prime rate remains at 3.5%. So no changes over there. But in Japan, there is slightly worrisome data. You know, inflation in Japan is proving to be very, very sticky. And the core inflation numbers that have come out for the month of May, they're actually higher than estimates as well. Core inflation is at 3.7% in Japan, and that's the highest we've seen since 2023. Japan getting into inflation zone and staying there. And it's also above the print that we had in the previous month. It was 3.5%. Now it's 3.7%. So there's a lot of guesswork on what the BOJ will do, whether the BOJ at some point will have to hike rates, irrespective of the other situations out there. Now, for India, the market has been going through a consolidation patch. At the headline index level, we've actually not moved at all. The Nifty is down 0.2, 0.3% for the week. The issue is the broader market pain. And that's really showing up because if you're looking at the mid-cap index or the small-cap index, then the cut is around 2%. The micro-cap index for the week is down nearly 3%. And yesterday, this was very, very clear. It was apparent. There's a lot of profit-taking going on after what's been a pretty decent rally throughout most of April and May. Let's see at what point this changes. On the flow side, actually, we had buying yesterday on the institutional front, both DIIs and FIIs. There were buyers, about 900 crores from the FIIs. Domestic institutions net bought stocks worth about 600 crores. I'll just quickly come down to some of the local market action in terms of news flow, regulation and stocks. So watch out for a lot of the project financing companies, and many of them are large NBFCs like PFC, REC, HUDCO, IRFC. Also, watch out for large PSU banks, which are into project financing, because we finally have the RBI's final guidelines and rules on project financing. And the good news is that they're not as onerous as what the draft had indicated. For instance, the standard asset provisioning for projects which are under construction, as per the final rules, will be 1%. The draft had proposed 5%, and that's when these stocks had really sold off. Similarly, when there are other details as well, we'll get to them in a bit. The sum and substances, the rules are not as bad as what was initially being feared. So watch out for these stocks. And in terms of more order wins and news flow around fresh orders, I'll watch out for ITD cementation, because the sum total of the orders that they've bagged is about 960 crores. It's a large number. So let's see if the stock reacts well. But it's going to be all about those mid caps, Nigel, and whether the broader market can see some sanity and some stability today.
Well, I think the key to track from here on for the next couple of days is going to be the United States' role in the ongoing conflict between Israel as well as Iran. That's going to be very important, whether it's to the escalation side or to the de-escalation side. And that's a trigger that the bulls are fearing, actually. And that's why we've seen some kind of selling in the last few days. But to be fair, if you look at it in yesterday's trading session, the biggest negative was the kind of pain you saw in the broader markets, because the headline index didn't move too much. Towards the end, you had a 50-60 point downtick, but that was the weekly expiry-related factor, and that's why you saw a sharp fall in trade. However, the mid and the small caps, there was a lot of pain out there telling you that participation itself was fairly low. And that's precisely what happened. So you had a fall yesterday, but the volumes were much, much lower than what we have normally seen. So you compare it with the 10-day average, you'll say, well, there were a couple of large trades. Still, yesterday's NSE volumes were close to around 14 to 15% lower in comparison to the average, even stripped of some of those large trades. So the fall yesterday was actually on rather low volumes in the cash market. And that's also seen in the futures market, actually, because there has been some unwinding of positions, both on the Nifty as well as on the Nifty Bank side as well. Well, moving to one factor that's really cooled off is the index, the India VIX. Because in yesterday's trading session, when you have the index that's down, you'll normally see the VIX pop up a little bit. But all through this week, the VIX has been fairly stable. So the fear index actually has not spiked up, which is in a positive in that sense. Moving to the options data, then you had two strikes that were fairly active. 24,800 call, 24,800 put, both of them fairly active. You club the premium together, it's close to around 400 points or thereabouts, and you're getting a broad range, just in the near term. So it could be a strategy at play with regard to writing both those two strikes and pocketing the premium. But I think the near-term range, if you're looking at it, has to be around 24,600 to around 25,000. This is just for the day I'm looking at in terms of a tight range. And the Nifty, it's trading a little below the 20-day MA. By the end of today, you'll want it to end closer to this mark. So that's going to be the important mark. But otherwise, the 50-day MA comes into play, which is at around 24,450. The Nifty Bank, the recent low is at around 55,100. You don't want that level to get broken on the downside. However, the bulls' wish list today is maybe the Nifty Bank ends closer to around the 20-day MA. In fact, crosses that as well. That's going to be the hope out there. Stocks that I'm looking at, well, the sensex changes will be effective on Monday. But today you'll have the readjustment that takes place. So in terms of inflows, we'll be keeping an eye on Trent as well as BEL. These two can have a bit of a move, particularly in the final hour of trade. And on the flip side, Nestle and IndusInd Bank could see some outflows. So I'll keep an eye out on all these four stocks. For the Nifty, it appears we're in a bit of a range. The broader markets, I'll keep an eye out there. Yes, it was a bit of a painful session, hoping for a better one today.